welcome to the CNBC TV18 special. I'm Shireen Bhan and we're in conversation with a man who always moves the market whenever he speaks. He's chosen not to speak for a while. It's been about, what, 6 months since you appeared in public, Rakesh Jhunjhunwala, and spoke about the markets. A little known fact about the big bull here, would have liked to consider a course or a profession even in journalism. So let me start then by asking you, if you were to write the headline for the markets today, Rakesh, what would it be?
Well, I think markets, any runner has to take a rest. So in the market, the speed it was running, it had to take a rest at some point. But they say that bull market's corrections are severe and short-lived. So sharp, severe and short-lived.
So do you believe we are going to see a sharp correction?
Well, it's just the first day, it's difficult to predict. But we had a rise from 7,800 to 9,400, 9,500. So even if the market were to correct a little, I think it will become healthier. So it's difficult to predict whether, if you see 2-3 days of continuous falls with good volume, then we could say market could go into a correction. One fall doesn't make a summer.
No, it doesn't.
So one day's fall, I won't necessarily conclude that we're going to...
No, I wasn't asking you for a headline for today's market movement. I was asking you for a headline for what we've actually seen happen over the past few months as far as our markets are concerned. I mean, if you look at the numbers, Sensex up 26%, Nifty up 32%, mid-cap index up 95%. So,
but I will only say one thing, that we shouldn't count the good things of life. A woman's age, a man's wealth, or the number of drinks...
That's odd for somebody who dabbles in the market.
Or a number of drinks a man has had. So... this 23, but one thing I can only say, that happy days are here again, and we should welcome them.
So let me get the headline then out of the way. As far as you said, we shouldn't count things, but the market is probably waiting to hear from you. The debate is on. Close to the peak, have we already peaked, valuation, so on and so forth. Where do you see things from here on?
See, ma'am, when people talk of peaks, that is the time when peak is not near. And the bull market is too short a time period for the bull market to have, finished. And see, for bull markets offer a stock to correct, you need three things. First, you need tremendous valuation froth.
And you don't believe we're in that territory?
We're not in that stage at all. Maybe selectively, but not in that stage at all.
Okay.
And, when there are a lot of value, right? Second, you need commitment froth. Everybody in the market should be committed and leveraged, most players. And third, then you need bad news. So what happens when you have valuation froth and then you get bad news and everybody is committed? So then when the market falls, the leveraged buyer has no choice but to sell. And because there is a lot of valuation froth and everybody is committed and there is bad news, it's very difficult to find a buyer. So I think the bull market will really eclipse when there is all three factors present substantially. Valuation froth, commitment froth, that means there is a lot of leverage buying, or even investing people are completely committed, and third thing is bad news. So then on the bad news, when the people sell, you don't find a buyer. But there may be valuation froth, but there is no commitment froth. There's bad news, people sell, but you find buyers. So I think we are far away from that.
Okay, that's very emphatically put. I can't remember the number of fars that you added there, but we're far away from that scenario. But
I also want to add there is that, it's not that we are having this bull market as a function of just commitment. See, what's happened, I think India is I would like to 3 years of the government has passed. See, to change anything in India is very difficult. India is an elephant, right? But to the kind of change which Mr. Modi is bringing, and because it's going to take time, I've always predicted that India is going to grow double-digit, and I've been predicting since 2000 AD, right? And I think I also predicted that a tsunami of local money will come to the markets. Right? Now, to change India, you need a lot of time. Even when Mr. Modi became the Gujarat Chief Minister, it took the first term, he was basically understanding everything and preparing for change. I think he is doing similarly in this Prime Ministership. And his attitude is, how I will compare his attitude to other politicians, that suppose you want to put water through a pipe. The pipe is leaking. It's rusty. But the politician will say, put more water, put more water. So Mr. Modi is trying to put more water, but his bigger priority is to see that the trustiness goes away, the leakages are plugged. So, to do that takes time. So the effect of what he is doing is going to take time. But I don't see it's more than 2 to 3 years away.
Okay.
And then you want to have that explosive 10-11% growth. And remember one thing, that he has transferred so much money to the states. He's increasing spending. Still, he's maintaining fiscal responsibility. I don't think the Indian economy has ever seen such a, such a sunny time where you have stable interest rates, good currency value, you're on a threshold of major growth. I think the NPA problem now also will be resolved in the next 12 to 24 months.
Since you spoke about the NPA problem, let me start by talking to you about that specific issue. We've seen this decision that's been taken by the government. We're still awaiting more clarity on the fine print from the Reserve Bank on how this is actually going to work. But has this changed your view on public sector banks? We've seen a significant rally.
Sure,
and how do you see this playing out? The jury's still out on how soon we'll actually see this play out.
The problem is that there is a cancer, it is known. Now you are afraid to treat or have an operation for the cancer, because what will happen? First of all, the banks are not admitting the NPAs. So Mr. Raghuram Rajan made them admit it.
Yeah, so there's been NPA recognition.
Right?
Yeah.
Right. Second is, see, you have to resolve the matter. Suppose there is a loan of 45,000 crores. Now 30,000 crores is good. But still, the entire thing, not the entire amount may not be provided for. And you cannot get ahead in life. See, there have been even more severe financial crises in the world. In Sweden, in America. But those crises have been solved if the economy has been on an upswing. So the Indian economy is on an upswing. So the question is, what the Reserve Bank could do is, and it's still in the framing stage, it will force the banks to recognize the NPAs and provide for it. That's not going to solve the problem for public sector banks, in my opinion, because they should need capital to provide.
Yes.
That has to be found. Second is, at Pedder Road, 14 banks will be there of a common owner, which is the government of India. So their cost income ratios don't go down. So how do you work on their efficiency? And third is, there is a big shyness to lend, right after the experience. So that shyness has to go away. So I think, at least for the banks who have adequate capital, right, the cancer will be operated upon, and the results will be known. And I think the results will be good. So banks who are well run, who are efficient, right, I think for them it is the last 18 months of difficulties.
So you think the pain, at least for the likes of SBI, etc.
See, I don't want to take any names.
Sure, fair point.
Right, but for banks which are efficiently run, which have got adequate capital, I think we'll be out of the woods in the next 12 to 18 months.
Okay. So does this make you more confident about the state as far as the Indian banking sector is concerned?
Absolutely. Another thing that's going to happen is, see, most of the bank NPAs are arising out of lending taking place between 2009 and 2013. Now those NPAs will be recognized. Post 2013-14, banks have been very careful in giving money, right? So I don't anticipate much NPAs once the legacy NPAs are solved. So after that, then banks, if the credit cost goes down, they'll perform well. And then I also see an upswing in credit growth.
So let me ask you then about how all of this translates into earnings growth. And do you believe that we are now going to see a significant pickup as far as earnings are concerned?
See, I don't look at earnings, on a broad basis. The sectors, private sector banks are doing well, NBFCs are doing well, metals are doing well. It's only pharma and software, which is a good constituent of the Nifty, which is not doing well. Pharma, I think, has made or is near a bottom. And software, I think, growth rates in future, according to me, are going to be better than what the market's predicting. Maybe not this year, the years ahead.
So you're confident about the tech sector?
I don't say this year would necessarily be very good, but I surely think that with period of time, these growth rates will improve.
But what are you basing your confidence on? Because if you look at the commentary that's coming in, whether it's on the visa-related issues or generally as far as the environment is perhaps overblown. Yeah.
I'm basing my confidence basically on one thing, that I don't agree. I think software spending is set to go up.
Yes, it is.
Now it has the model has changed. And I am confident of the Indian companies' abilities to change to the model. They may take time. There may be less work in maintenance, but more work in digital. So I think with time, Indian companies will respond. And the Indian cost and ability, I don't say only cost and ability advantage is unmatched. So there's no question Indian companies are going to take market share. So I see no reason why tech will not come back.
So you see a revival for the tech sector?
Yeah, but I'm not recommending to buy anything. But
I made that disclaimer right at the start of the show. No recommendations here. It's just a conversation.
So it is. Because I feel that, you know, Indian companies have changed their business. They're just in Y2K. And I feel that Indian companies are doing far greater growth, far greater and better quality work than just linear work. So I think there is underappreciation of the quality of work Indian companies are doing. And I see with their cost advantage and the ability advantage, and I use the word ability, I see no reason why they will not adjust to the new models. It's taking time, that's all.